Good morning, good afternoon, and good evening, folks. I hope all you guys are well, as always. Just please give me a sound test and a screen test if you can also see it as well. So a yes or no will do. Folks, thank you for replying that, and I'm glad that you guys can hear because now we can really conduct our webinar from here onwards. And of course, today's topic is immensely important because this is a masterclass about how to trade stocks. So we'll be really talking about how to go around and find those stocks. And perhaps we are coming towards the end of this particular series, which is very much focused on COVID stocks. But I believe there is still juice left for another few months. So we will continue to focus on these ones. So just a bit about myself. My name is Naeem Aslam. I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader for Bank of America, and currently working as a chief market analyst for AvaTrade. So that's a little bit small history about myself. Now let's begin the webinar. As always, before we do anything else, it is important for me to go through this disclaimer and risk warnings. Anything which will be discussed cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. The full disclaimer is right in front of you. In terms of our contact details, they are right in front of you. So the Twitter handle for AvaTrade is AvaTrade, and for YouTube, it is Daily Fundamental Videos. That is one of the segments that we produce every single day. And the other one that we also put out is your technical analysis video. Again, that is a little bit for those guys who are a bit more trained, who know, how what to do and what exactly is going on in the market. So this is sort of for those investors and traders. Nonetheless, let's move on a bit further and look at the agenda for today. Before I begin with the agenda, I need to ask a couple of questions from you guys, and feel free to answer them. So the first of all is, how many of you, because we got quite a lot of people here, how many of you have actually taken any course in terms of stock market, in relation to any specific stock trading courses, educational courses I am really referring to, or anything to do with the stock trading? If you have, please say yes, and if you haven't, that is okay as well. Nothing to be embarrassed about that at all. So do put that no out there as well. So I do see that the people are talking about that they have received mainly very basic free courses, I suppose, rather than any of the paid education that you have. Well, I mean, in this day I have done few Forex courses. Ruben is saying that. Okay. Ruben, that is good to know. So basically, folks, education is the most important element of this part of the business. Just like any other profession, like if you wanted to become a lawyer, you have to go to university. You have to spend those years at university studying law. And if you wanted to become a doctor, do you go to university, you study all that courses and syllabus in university, and then you start practicing, just like how lawyers, they start at a very beginning stage, and the doctors also do their home house jobs and all of that. So trading is no different to any of those professions as well. If you think that you can make quick bucks out of this particular business, then perhaps this may not work out that well. But if you are paying attention to getting the right courses in and to really get an extra help, that should really work out well for you. Because without training, without education, without good numbers of those training in the demo accounts, I think it may not be the best idea to put the real money on the line and then just start trading on back of that. So that's my personal opinion on back of that. So if you do have any questions, feel free to comment over here, and then I'll be more than happy to answer them. Right. So in today's agenda, what we will be doing is we'll be measuring indices. I know that you may be thinking that, Naeem, this is a stock trading masterclass. Why are we looking at indices and sectors? The reason that we'll be looking at indices and sectors is because everything becomes part of that journey. So we need to know which is your winning index. We need to know which one is your winning sector, and then perhaps we wanted to drill down into those sectors and try to find the stocks which either have a lot of value for us, or they are backed with quite big momentum, meaning they are making new highs, and then there is still plenty left, not only in that stock but also in that sector as well. So this sort of makes our base that why we need to study indices and sectors. Now, of course, because it is very much COVID, and the COVID sectors are in play, so we'll be looking at several different sectors. So the sectors are like these ones, like streaming, airlines, pharma, retailers, energy, banks. So these are what you call your sectors and subsectors. And within them, we'll be looking at stocks like Disney, Netflix. In the airline, we can be looking at Boeing, Rolls-Royce, Ryanair, Wizz Air, EasyJet, United Airlines, American Airlines, and all of those particular names. And in the pharma, we could be looking at Johnson and Johnson, Pfizer, and of course AstraZeneca has also been in the news, so we could look into that. In terms of an online retailer, this is a really big opportunity because COVID has fast-tracked everything, and e-commerce has got quite a lot of tailwind behind it now from here onwards. So we would expect, so companies like Amazon, eBay, Alibaba to perform quite well from here onwards. And in terms of energy, it is all about transformation from here. How these big names like Chevron, Exxon, Shell, Total, they are diversifying their businesses from the traditional fossil fuel energy, which is oil and gas, to more renewable platforms such as green energy. So that would be our focus in terms of that. And of course, in the environment of a low interest rate and soaring bond yields, with the prospects of Fed could be doing anything with respect to their monetary policy, I think banking sector will again make a very good conversation for us to have it. So let's begin without any further delay. But give me a check, say yes or no if you guys are with me so far, if you guys understand what exactly I have said. And if you have any questions, feel free to continue to post them over here. And then now let's continue, and then let's see what exactly is in store in terms of uh, uh, stock market. So again, the first thing we're going to do is we're going to look at the Dow Jones Industrial Average. So I'll go through a slightly bit more slower for the first one, but for the remaining of them, I will pick up some speed because time is of essence, and the technique is going to be very much the same as always. So firstly, what we really need to see is the price where it is trading with respect to moving averages. So first, we have your 50-day simple moving average in pink, followed by that is your 100-day simple moving average, and finally your 200-day simple moving averages. These moving averages do provide enormous amount of a support and resistance for the price. So if you focus on the 50-day simple moving average, you can see the price came within the range of this one, and after a small violation, the price kind of moved back to the upside. It happened again over here, the price retested it and it moved back. And over here, when the price broke below the 50-day simple moving average, the price continued to move to the downside. I'm having a complaint that audio is really poor. Is the case for everyone, or is it just a one particular person who's having that issue? Can everyone hear me clear? Oh, okay. So everyone is saying it is pretty good. So Suhail, you may want to check your own sound system or your headphones to see what exactly is going on. So then we are looking at the moving average right over here at this particular junction. Again, it provides us a clear guidance right over here. The moment the price breaks below the 50-day simple moving average, we know that the prices are moving lower from there onwards, and then it comes back and moves above that, and then we have this range. So 50-day simple moving average can be considered as your primary, or as your not as your main support, as your minor support. But then after that you have your 100-day simple moving average, and this tends to have less whipsaws like the one that we have seen over here and over here, because as you can see that once the price moves above the 50-day 100-day simple moving average like it did right over here, then it continues to stay for quite a while time until it comes over here again. Then it had a test, and of course after that we had this sharp move, but then again, ever since, the price has been coming near its 100-day simple moving average and quickly breaking back to the upside. Similarly, the 200-day simple moving average is the biggest moving average in terms of your support, and what you wanted to pay attention to again is the same, that how price comes and respects the 200-day simple moving average, and it quickly bounces from there. Now, the other aspect of that is we also have to see how far the price is trading from its 50-day simple moving average, and of course 100 and 200-day simple moving average. And every time the price begins to trade quite far from its 50-day simple moving average like it did, after that what we really see is, of course, a retracement. So right now you could see that over here the price was quite high from its 50-day simple moving average, and now we are beginning to see, we are seeing that retracement coming into here, which is pushing the price back perhaps towards the 50-day simple moving average, and that is what we could see. So this really helps us to find whether the price is really overbought or whether the price is really sort of, how far it has gone. Another indicator which also sort of helps us to overbought and oversold is the RSI. Anything when the RSI starts to trade near 70, meaning that the prices are overbought and they are likely to see retracement, just like over here it happened, and then the price fell to the downside, and then over here again we are seeing that, and the prices are moving to the downside right over here if you see it. So that's just another confirmation. Now, the final thing that we wanted to pay attention to when it comes to all of this is that where the price is trading. So we can see that the price is trading quite far from these moving averages. Now we're going to look at the S&P 500 index. So at the moment that we flip the chart, we go to 50 for S&P 500 index, we can clearly see that the distance of the price and the 50-day simple moving average isn't that much. So that clearly tells us that the Dow Jones stock index is our number one stock index in terms of our momentum. It has a lot of momentum behind it, and that is what we've got to keep an eye on. And after that, we can look towards the S&P 500 index, which represents the overall market. But it still is telling us that the prices are trading above the 50-day simple moving average, and as long as that continues to happen, that remains in place, we are likely for these prices to move to the upside. So that is again quite an interesting angle to look at the prices. Now, similarly, we are going to quickly have a look at the Nasdaq 100 index, and what it tells us is that the story is very, very different when it comes to the Nasdaq. Why? Because the Nasdaq 100 index has not only violated and broken below its 50-day simple moving average over here, but it also violated the 100-day simple moving average, and then it pretty much came close to its 200-day simple moving average. And from here, we started to see the first momentum which pushed the price back above the 100-day simple moving average, but it got and then the price tested the 50-day simple moving average over here, but it failed, and that pushed the prices back below the 100-day simple moving average. But now, once again, we are seeing that momentum pushing the prices back above the 50-day simple moving average, but it still needs to break above the 50-day simple moving average. So in other words, what we are really seeing from here is that yes, the Nasdaq index is our number 3 index in terms of momentum. It doesn't have momentum, so your tech stocks are likely to see more and more retracement in that perspective. And the Dow Jones is obviously your industrial moving average. It represents your industrial stocks like United, American, and so Boeing. So those are the stocks which are still going to be having a lot of momentum on their side. So does that make sense to you guys so far, what I have explained? Because from here, now we are going to move forward, and then now we're going to start looking at each individual stocks, and then we will perform, as much as we can within that space. All right, so people are happy with their choice, so that is good to know. So let's begin our conversation now. Let's take the conversation one step further and then see where exactly that is really going to take us. So first of all, what I'm going to do is I'm going to begin by looking at the banking stocks. Now, clearly, this is Bank of America, and it has a massive, massive rally more recently. And what we have also seen is the Bank of America forming its top in around 39.16 to 39.84, and now the prices are retracing. Now, in terms of our resistance, that the area which I have marked over here represents a good area of resistance. So if the price comes back up and it moves back up to the 2 here, we could potentially to look to short this one. But remember, the momentum is extremely or immensely strong when it comes to this one, as the price is moving to the upside. So that is something that we got to keep an eye on with respect to this one. But in terms of our support, it is this particular area where I have drawn my 2 lines running from 34.53 to 35, and this remains our support zone in terms of our price, and this again is for our resistance zone. So this is a better area for us to get back into the trade, and I think that it is possible that the price will come and retest this area. So if you are looking for Bank of America, you may want to look at these particular price levels which I have drawn. Overall trend in terms of Bank of America, there is no doubt that is very much shaped to the upside, and we are looking for the prices to continue their journey to the upside. But keep an eye on this particular small area of support. I doubt that. Okay, so the question is coming in, how do you work out the support and resistance zone? Again, if you wanted to learn more about support and resistance zone, I'd be more than happy to talk to you guys one-to-one on that sort of subject in a more formal sort of a training. But generally speaking, you will look at the support and resistance zone by looking at the way that the price left from its previous levels to the upside. So when we look at this area of support, we see that the momentum from here has been very, very strong to the upside, and the price has spent very little time in this area of support, just like how this resistance has done it as well. So again, if I'm looking after this one, if I'm looking at another area of support, I'll be looking at this one, because again, the momentum has been very, very strong to the upside. And after that, I will look at this one, because this is the area which initiate all of these reactions, this one, that one, and how it pushed the prices all the way to the top to here. So this is the best area of support. And after that, we still have another area of support, which is where we have a lot of buy orders perhaps sitting in between $28 to $29. So there are so many different areas on that, but again, that's just a basic concept of doing them. Now let's move on to the next important stock within the banking sector, and that is your Goldman Sachs. Again, our resistance is going to be near the all-time high, and that is going to be right over here. We're going to mark it between 350 to 356. In terms of our support, we will continue to look at this area, which was first, but the market went up and it came down, and then this particular candle retested all of this area of consolidation again and confirmed that yes, if the prices do come back into this area, that is our potential to look for a buy order or so. Or alternatively, we can be looking at this gap area which has not been filled and which is just slightly below the 50-day simple moving average. But overall, the momentum is immensely strong when it comes to Goldman Sachs, because we have seen big momentum coming into the market since October, as you can see it right from here. And now the price has moved from 188 to all the way to 356. So in terms of that particular market, we are seeing the prices moving to the upside. Again, when it comes to Goldman Sachs, you probably wanted to look for an opportunity to go long rather than go short, just like how Bank of America, we have done it, because the momentum is really, really strong. Now, another industrial stock which we wanted to pay attention to is our Boeing. So what is happening with respect to Boeing is that we have to first of all look at where our resistance is. What do you think our resistance is going to be? I mean, if you are looking at this area of consolidation where the price started to sell off fairly recently, then you are absolutely correct, because this is also the area where the price, the first gap happened after a big move for the first move to the downside. Another gap happened, and sort of another gap happened over here, but again another gap happened which is completely filled by the price over here. So if I am looking for a resistance, I'll be looking my first level of resistance right over here, but my following level of resistance is really going to be just ahead of that gap which has not been filled. So there is still plenty of room left for this particular market to move to the upside. And in terms of support zone, the area to buy, we'll be looking at between $213 to $221. And because we believe once the price is here, once the price comes into this zone, we could have a potential opportunity to go long. Why we wanted to go long? Because the overall trend, just like the other stocks, is still very much to the upside, meaning the price started to pick up its momentum again in October after forming more or less the double bottom, and the price moved from 136 to 278 fairly recently, now trading at 240. So again, massive moves have happened, and that is what we really wanted to kind of keep an eye on. Now quickly we will continue and we will focus on other stocks by defining the support and the resistance levels in them as well. Now with respect to Netflix, that of course that work from home trade, which marked the high for Netflix right over here at this particular point, after that the price continued to move to the downside. What we're really seeing is that can the price break below its downward trend line. And then the first time it happened was when the price, when we joined this low to this low, this high and this low, and then the price gave us an indication that yes, the prices are moving to the outside. Then we had to draw another one, and by that we started to draw this low over here, this high over here with this particular low, and then again we had a very clear indication that yes, the prices are starting to move higher. But this time when the price went up, it was challenged by the 50-day simple moving average, and from there onwards price sort of struggled to move to the upside, and that kind of confirmed to us that okay, look, the momentum is not really there, but bulls are taking control of the price. So in terms of an opportunity, if the price breaks above, then in terms of Netflix, if the price breaks above the 50-day simple moving average, then we could say really that it is really going to go to the upside. And in terms of a resistance, the immediate resistance, we will be looking at between 556 to 559. I think that is a good area of resistance that we should be really looking at. In terms of support level, what we could be looking at really is where the 100, 200-day simple moving average is trading, and that is just over here. So because this is a support, so we will change this one to our into a green color so that we can clearly differentiate that from a resistance zone. So this is the area that we're really looking at. But at the same time, let me remind you that the price is very much in battle with the 50-day simple moving average, and if it breaks above it and stays above it, then that would be your entry in terms of Netflix, really, that we are kind of looking at. Now, after Netflix, we are looking at Tesla. And now, obviously, this gap which happened, which was after the stock split, and that's what pretty much it. And what we're really looking at is that the prices could really bounce today to the upside because of the big news which came out from, what do we call it, from a Bitcoin. So in order to see the chart of Tesla, I have to change our platform and then go to this one because this one really kind of shows all the stock splits and stuff. So what we're really seeing, the idea is very same with respect to Tesla as well. This is your 50, this is your 100, and this is your 200-day simple moving average. Price is trying to stay above the 100-day simple moving average, but so far it has been struggling. But let's see when the market will open in 2 minutes time, if how far the price will move from here, because now Tesla offering Bitcoin is certainly a positive thing, but it also opens the company to several different risks at the same time as well. So let's have a look of one or two stock again before we call it a day. And then the next particular stock that we'll be looking at will be Amazon. There is no doubt that the price has been trading in a sideways trend, and fairly recently we had this opportunity to buy it, and now we are getting another opportunity because the price is moving back above the 200-day simple moving average. And the moment it breaks above the 50-day simple moving average and stays above that, that means that Amazon prices are really likely to continue their journey from here to the upside. Same situation perhaps for Google isn't the same. Well, the situation isn't the same for Google at all, because Google has been trending to the upside with a lot of explosive moves. So we are looking at this particular area as an area of resistance, but as an area of support. With the minimum area where we wanted to keep our focus on is going to be just right over here where the prices are trading. And because this is a support zone, we should be changing the color to green. So the moment that we look at the chart, and we know that which one is which one is what. So when I look at it, I know this is my support zone, which runs from 1696 to 1762, and then this is our resistance zone. So really not much opportunity in terms of Google, but this is your weekly chart, and then this is, sorry, that was your weekly chart, so this is your daily chart that we should be really looking at. And again, the opportunity, it really is that the price is staying above the 50-day simple moving average, and if it continues to stay like that, then we are in we are pretty okay over here. Does that make sense, what I have discussed so far? Well, most of the stocks are available in the demo account, so don't worry about it. Yeah, and but it's all about practice. And can you look at VXXB? So, Hale, I have done brother VXXB, but I can do it again for you. So give me a quick sec. We'll just run it very, very quickly. The VXXB is very much trading to the downside. That is your volatility index for those of you who don't know. This is your volatility index over here. So it is very much trading to the downside. We're not really finding any sort of a support really coming. So what we really wanted to see at least is on the 4-hour time frame, we want the price to break above the 50-day simple moving average, which is trading around 14.51. So if we break it, then it's fine. Otherwise, in terms of a short trade, the opportunity isn't even there. So really the opportunity will only come if the price breaks above the 50-day simple moving average on the 4-hour time frame. So time is very much up. What would you trust more on, moving averages of 50 or former lows? Both of them. So, but really good question. So someone is asking which one I trust, 50 or former low. 50 is something that I pay more attention to, but 100 is that I pay more attention to, and 200 I pay even more attention to. All right, folks, I hope this was helpful to you guys, and I will see you guys next week, same place, same time, and stay safe.